AU Small Finance Bank, can it end its 4 years of underperformance? So we are seeing a peculiar situation where some of the private banks that are preferred by investors and institutions are underperforming significantly, and AU Small Finance Bank is one among them. And it is only small in its name, but in terms of market cap, it is the 7th largest private bank, and it is also larger than 7 listed regional private banks in terms of market cap. So AU is also a regional bank with its focus on North and West, and Rajasthan being its home state, and it became a small finance bank from a vehicle financing NBFC. So why this underperformance for the last 4 years? Let us look at it. Number one, like other larger private banks like HDFC or Kotak, etc., AU has also seen significant contraction in its valuation from almost 7 times price to book value in 2020 to almost 3.3 times now. So even though its EPS more than doubled in the last 4 years, this valuation contract has played a spoil sport. And second, if you look at the latest key metrics like ROA and ROE of AU for FY24, they came at 1.6% and 13.5% respectively. These are by no means really superior numbers for the market to give a very rich valuation to a bank. So a combination of valuation contraction combined with deterioration in key metrics actually led to this underperformance. So now what lies ahead? So going into FY25, there could be 3 things in favor for this bank. Number one, this with the cost of deposit stabilizing, this contraction in NIM, ROA and ROE may be coming to an end, and the bank may be eyeing better in terms of all these key metrics. And second is it has recently acquired Fincare Small Finance Bank, which is predominantly south based, so it will actually take AU into a pan-India bank with this merger, and also with its advances moving to a significant milestone of close to 1 lakh crore mark. Third and most important is that AU's MD got his term extension until April 2026 for 3 years. So this is extremely important because RBI has been reluctant in extending terms of the CEOs for many other banks, and leadership continuity is extremely important for a bank. So unless AU is caught by any negative surprise related to merger, it could be in a better footing in FY25 compared to FY24 to deliver actually growth combined with profitability as well. And the valuation at 3.3 times is still richer compared to larger peers or the overall banking system, and AU will have to deliver higher growth to compensate and justify this valuation.